Hey everyone, welcome to the Black Ink Economics video about the Williams %R for specifically swing trading. The last video I did on day trading, thought I would do both in the same video, but I think people like to keep it quick. So this one's specifically swing trading. If you didn't watch the video about the day trading version, we're going to go over the same rules, and if you did, you might be able to fast forward like 45 seconds, I don't know. But what we're looking at here is the Williams %R, which is, I know there's a lot of stuff on my screen, but it's this very top one that says Williams %R. Boom. That's the technical indicator we're talking about today. Because it is just so simple and beautiful that it's a great one for the first time anyone's learning one, because A, it will do exactly what I tell you it's going to do every time you see it. And for me, using one like that to learn is huge, because you'll actually see, oh, the price went up, and you looked back at the Williams, oh, Williams is over -50. How about that? So it's going to always work this way, and this is why it's such a great one to learn first. So the idea with it is what I just kind of briefly said, which is when the Williams goes over -50, Williams %R goes over -50, price is bullish. So the first moment that happens after it's been a while that's been under would be a kind of your first bullish signal that there's like a reversal happening, or a next step or whatever. And when the Williams goes under -50, the price is going to go down. That's what's going to happen. Typically speaking, the Williams is as accurate as it gets, incredibly accurate. When the Williams goes over -50, you will really see that correlate 100% with price going up. But it doesn't tell you how long that's going to happen. It may go up 1%, and then all of a sudden, the very next candle, that Williams goes under -50. Or it could go over -50 and be there for a month. I've seen it. So with that in mind, Williams, that's why you can't use it by itself only. It's not the end-all be-all, but by itself it is very, very accurate, and you can use it as a way to realize and learn that technicals are actually something worth really using, because they will only improve what you're already doing, whichever strategies you already use. So let's start with Continental Resources, because they're in the news a lot. They're one of my favorites. They're looking to be bought out, and I'm sure someone's going to buy them. So they've been on a hot tear also because they're oil. And you can be a swing trader, which swing trading means overnight or longer. It doesn't necessarily mean investing, which would be fundamental, year-long, more, whatever. Swing trading is you're just trying to avoid the day trade, basically, which would mean you might be day trade limited, which happens if you have under $25,000 in your trading account. Or it might just be that you want, a lot of people who work all day and want to just kind of look at the market before it closes at the end of the day and maybe make a buy, and then they have an hour, a half hour in the morning to decide what they're going to do with their setting their stop losses and whatever else. That's kind of what they might be looking at, is more the 1 hour signal. So Continental Resources, let's say you were just cruising through time. We're going to just pick, I'm going to do this kind of random. I'm just going to zoom in on a random time, and we're going to use these swing trades. So I'm looking at this, and I'm wondering, should I buy Continental Resources at this point? This would be April 4th in the middle. I'm going to move it all the way to April 4th. And very key, if you're going to go along with me on this chart, this is important. That says 90 days, 1 hour. That 1 hour is what matters. If you have a 20-day 1 hour, you're going to see the same thing as me as far as technical levels go. You're just not going to have the same range of dates on the upper chart. But the 1 hour is how long the candles are, and that's what sets the technicals. So that's how you do that there. And then what you'd be doing is you just be cruising along in life, going, I really like Continental Resources. I'm way into oil right now. Energy's killing it. And I want to know when I buy, and I've heard about it. So you check it right here. Let's say this is where you are in life, Tuesday the 5th. And you go, oh, you know what? It might be a great trade. It might be an excellent company. But right now, market psychology, Williams under -50, this is not going up. This is going down. So you wait, and you wait, and you wait, and you wait. And you pat yourself on the back at this point because you waited, and it's coming down, giving you cheaper. And then all of a sudden, crosses. All right. That's one candle. In this case, we're going to see, obviously, hindsight is 2020. In this case, it's very hard to catch the first candle. You might have, but you would have noticed the second candle. And unfortunately, the second candle in this case spiked very hard. It doesn't always happen. In this case, it did. However, You have that signal. That's your first Williams over negative 50 signal. And this is what I meant when I said it earlier. Even though it's accurate, it is not long-lasting necessarily. The Williams doesn't give you an idea as to, is this a pattern that's going to be going on for a long time, or is this just a little minute-long thing? So that's why we use our technicals. But continuing along with just the Williams, you have your first little bullish signal, and you go, if you bought it, maybe you're holding and you're kind of upset with yourself, but all of a sudden it goes over negative 50 again, and you go, oh, thank God, it's over negative 50. I can take a deep breath. You can walk away from the computer, get yourself some coffee. And then you come back maybe a couple hours later and you go, oh, that's cool. I'm doing well now. Because the price goes up when the Williams stays over negative 50. Not because of it, but it correlates with it 100% of the time. And interlaced in each one of those candles, by the way, if you were to zoom into the 5-minute, there would be many periods where it's bearish. The Williams will crash under negative 50, but that's on the 5-minute chart. So that would mean for the next 15 minutes, 40 minutes, it's bearish. When you're looking at an hour-long candle, you're not really looking at the price variation, how it went down during that hour. You're just looking at the one candle forming. So time frame really matters. And the 1 hours, one of the things you get from using that 1 hour is a little more longevity. The Williams is wishy-washy as it is, but it is less wishy-washy at the 1 hour level, where when it makes a declaration, it's making it based on data it collected over the entire hour, whereas the 5-minute, it was data it collected over 5 minutes. Not as reliable as far as how long it's going to be if it's only 5 minutes worth of data. So that's where that kind of comes from. So Williams over negative 50, you're still happy as a clam. Here we go. Doing all right, doing all right. And there's your signal. There's your Williams under negative 50 signal. It's a pretty volatile ticker. So this is not a sell signal, by the way. If you watch the day trading video, I corrected myself many times about that. This is your bearish signal. The Williams went under negative 50. That is objectively bearish. What you would do about that if you had made a buy in this area and you're now in this area is up to you. My subjective opinion, maybe if I had purchased that for a swing and we're now on Thursday and we're now on Friday, if that was more than 10, 15%, I'm pretty happy with that. The way I look at it is if you're going to pay a guy money to make you 15 to 20% a year and you can do it in a day or two, do it, right? I mean, why not? And don't pay the guy. So there you go, 15 to 20% overnight. Very happy about that. The Williams held up the whole time. If you know the other technical indicators, you can see how they stayed bullish throughout that whole time as well. And then at this point, maybe you initially, when you made that buy at the black line, maybe you put your stop loss here. And now that it's going all the way up there, maybe you want to put your stop loss like where that resistance was. So now you're saying, all right, I'm willing to sacrifice that much of my loss to see if I can get another step up. Or maybe you're just a hardcore, like, I believe what I just did was awesome, and I'm going to just put my stop loss there. Or maybe you sell half now just in the market without even using stop loss to protect it. Whatever you do, you protect it because you're smart. That's all that matters. And here we go. The Williams goes under negative 50 and the price comes down. Then that was all day Monday. All day Monday was bearish. But then all of a sudden, looks like Monday into Tuesday probably didn't really register till that first candle Tuesday, till that candle right there when it went bullish. Over negative 50. And let's go back to that chart and see what happened next. Beautiful. All right, so we're just going to take a screenshot of the same thing I just did. This is where we were kind of looking at. That was the candle that it went over. You can even use a ruler to verify exactly. So that's where it would have been. You know what? You would have had, if you could move in an hour, that's hard, but if you would have had an hour to make that decision. That's one candle. 2 candles would have put you at 64-ish. But then this whole time, as long as the Williams stays over negative 50, you've got bullish price action. So here we go. This whole time, it's over negative 50, it's drifting higher. And maybe that's another caveat about the Williams. It doesn't tell you if it's going to explode higher or just grind higher. It just means bullish overall. And then within those time periods, like here, it kind of barely went over negative 50. I am 100% sure that right there, the 15-minute and the 5-minute went bearish. But because you were making decisions based on swing technicals, which means you were using the 1 hour, you weren't listening to those 5-minute and 15 minutes. So you held on because of that in this case, or in this scenario. And that swing trading kind of thing that's the difference. That's what the 1 hour gives you, is a little more longevity, a little more holding power, maybe a little bit more future predictability, trajectory kind of wise, as far as it goes. But then every time the Williams goes under -50, you get a crash. And here's a perfect example of that. And actually with Continental Resources, if you're an options trader, this would be huge for you. If you were cruising along in life as an options trader and you happen to notice this Williams crash here and you bought puts, 64 to 56. I mean, if you had bought $60 puts, you probably would have doubled your money or more. Who knows? That was a huge dip, and the whole time, the Williams didn't tell you it was going to fall that far, but it did tell you it was going to start dropping, and then it did tell you when it was going to stop kind of dropping here. So that's how you use the Williams %R as a swing trade variable. Over -50 bullish, under -50 bearish. Swing trade, big key thing is that 1 hour, whatever chart you're using, use the 1 hour candles so that you can get a little more longevity to the Williams predictor. If you're day trading, you use that 5 minute, 1 minute, 15 minute, and that gives you less longevity but more accuracy in the short term. So, all right, that was the Williams video. I'm going to do another video for the website that goes over accumulation distribution and how you use it to get an idea as what market makers are doing, like, under their little window. So that instead of them manipulating you, you can see that they're manipulating and do something about it. So that's what my next video is going to be. It's going to be on the website. If you've seen this video, the other video will be there. And I look forward, if anyone has any notes, look forward to hearing what you have to think. All right, thanks, guys. Talk to you later.